I think, look, this is a market cap raid. Right? There's massive automation, fully integrated supply chain, optimization of government subsidies. There's no other car company that can beat them at this game right now in terms of scale, other than BYD in terms of in China. And so they're taking market share and market cap from all the other players. And so the goal is to get as many vehicles on the road as you can to get their AI out there, get their mapping out there, and ultimately get to self-driving. The end game is not to be just an EV maker. It's multiple business lines that people are betting on, from insurance to self-driving to energy generation and distribution. So cars are just part one. And if I was Craig and I'm looking just at the car side, I'd agree with him. But all the other things on the other end of that raid makes a big difference. And with a $9,500 profit margin to play with versus GM at $2,100 versus Hyundai at $1,000 or Ford at negative $760 per vehicle, they're taking market share and they're taking market cap.
Welcome back to another video where we uncover a financial twist that has the potential to send shockwaves through the stock market, and one that is particularly fascinating for Tesla investors. In today's video, we have an exciting topic, one that explores how Tesla investors can potentially make millions from their investment. Now, before you dismiss this as another overhyped claim, be rest assured that we're going to be diving deep into the factors that can contribute to substantial wealth creation through Tesla stock. So if you're a Tesla fan or considering investing, then this is one that you're not going to want to miss. So stick with us as we uncover the key elements that can pave the way for a lucrative journey with Tesla. Let's get started.
Yeah, and we already had a big move up earlier this week. We had a significant gap up beyond this 262 level. This green dashed line, if you look back here, was the start of a small gap back here. And we broke above it with a huge breakout there, a big green candle, but it was a false breakout. We retreated back within the boundaries of this horizontal now support level. It was then a resistance level. So we gapped up here. We're taking a bit of a breather though this week. Now after the initial gap up, now we're still trading near the top of this longer term upward channel, starting with our yearly lows near 102. And we're up 170% from that point here. It's always kind of funny when you have a sleepy day in a stock that's seen such strong price activity here. And you can see as well, we are kind of stuck in this volume node right here, centered around the 280 level. We'd want to see a move, like we were saying earlier, into a higher volume area up here near that 300 level. RSI trending downward here, actually. A little bit of bearish divergence here, and that price is making new relative highs, but the momentum is trending downward. Sort of a mixed signal though, because we were also in the overbought area there, which is a sign of strength, but now we're crossing below it. That's the bearish sign. So overall, kind of a picture of waning momentum here.
Tesla stock has demonstrated remarkable growth over the years, and investors must consider the company's potential for future expansion, innovation, and market dominance. As a Tesla investor or a fan of the stock market, you probably know that analyzing Tesla's fundamentals, like its revenue growth, profitability, and competitive positioning, can all provide key, valuable insights into the company's long-term prospects. And these fundamentals have shown that Tesla sure has a positive growth story moving forward. Hey guys, welcome back to Tesla Tomorrow. Tesla has recently supplied the US government with its confidential sales projections that show the EPA has severely underestimated its production and growth potential. For instance, the EPA model has it selling 100,000 vehicles per year in the US, even though Tesla made 5 times that amount in 2022. This provides that the automaker is confident in its production capabilities. Also, Tesla's commitment to fast charging and readily available superchargers, as well as its self-driving technology and safety measures, have all been major draws for potential buyers. Ultimately, Tesla has positioned itself to be the gold standard in the EV movement, and it looks to be improving on that pedigree over the time, and it just keeps on going. So why will investing in this leading company make you a millionaire in the future? Or maybe a Teslaionaire sounds even better. Anyway, let's get into the details. But before we do, if you like this type of content, hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. One critical factor that can drive the price of Tesla stock is its production numbers. As Tesla continues to produce more cars, it will be able to meet the ever-growing demand for electric vehicles. Tesla CEO Elon Musk has proposed the car company could produce as many as 20 million EVs by 2030. Musk has made it clear that this is more of an aspirational goal than a hard and fast number. There are roughly 2 billion vehicles on the road today, and they will all need to be replaced by electrically powered cars if climate change is to be controlled. According to Elon Musk, replacing just 1% of this total number of vehicles per year means that there will need to be 20 million EVs, and his goal is for those vehicles to be made by Tesla. To meet its production target, Tesla is already producing more factories globally. According to Musk, to reach 20 million by 2030, Tesla needs to build at least 12 to 14 new gigafactories between now and then in locations that have yet to be announced. Also, to meet a 2030 timeframe, all of these factors would need to be underway before 2027, just 4 years from now. Aside from production, Tesla will also need to expand its supercharging business. Tesla's supercharger network has grown to over 40,000 superchargers across the world, which makes it the largest global fast-charging network in the world. Similarly, Tesla's charging infrastructure does come with a lot of benefits, ones that can significantly drive up its stock price, and several analysts have identified this. For instance, Baird analyst Ben Callow sees Tesla's supercharger deals contributing up to $15.7 billion to its top line by 2030, and also adding as much as 45 cents to earnings per share. Likewise, Piper Sandler & Co. recently estimated that Tesla's deal with Ford and GM on its supercharger network could boost the automaker's annual charging revenue by $3 billion by 2030 and $5.2 billion by 2032. Similarly, Tesla reported $5.9 billion in service sales last year, and this figure included supercharger revenue. While this may not be so huge for a company whose total annual revenue tops $80 billion, it is still significant. Plus, those non-Tesla drivers will be exposed to Tesla's ecosystem of chargers and apps. And the benefits of all of this give Tesla a chance to convert some owners over to its ecosystem. But let's not forget that Tesla could, sometime in the future, license its FSD to other car makers. Licensing would drastically increase the reach of Tesla's FSD tech. This move might put Tesla's technology in a vast array of vehicles, encompassing various segments from luxury to economy, and so Tesla's technology could become even more widely used, influencing how self-driving cars are perceived and accepted globally. Beyond this, Tesla could also make a lot of money in the deal. By licensing its FSD tech, Tesla opens up new monetization avenues beyond just its vehicle and energy product sales, and this can significantly increase its income, making the company more financially robust. It could also help Tesla invest in other more ambitious projects like the Tesla Semi, the Cybertruck, and even unrelated areas like energy generation and storage solutions. Tesla CEO Elon Musk tweeted earlier in June that he was open to the idea of licensing other Tesla technologies to automakers, including its self-driving system. Opening up the superchargers, in other words, could lead to more deals. However, there are a few challenges here, and you may want to pay attention to this if you are thinking of investing in Tesla. Tesla's US competitors are all trying to catch up in the EV race, and so bringing in more revenue can only add to the company's momentum at a time when GM and Ford both say their EV programs aren't profitable and won't be for at least another year. As Tesla continues to ramp up production, its unique features and car build will be a critical selling point for the company. For instance, Tesla's designs offer safety and style combined into one package. Every aspect of its car's designs is made with driver safety in mind, which includes the lower center of gravity, higher ground clearance, and an impressive array of exterior sensors and cameras. This is something that sets Tesla apart, and it will help it maintain its leading position in the industry. What factors do you think will contribute to Tesla's valuation in the future? Let us know down below in the comments. And for more details about Tesla and its stock price, go ahead and click on this next video on your screen. See you there.